President Nana Akufo-Addo of Ghana has formally unveiled the Development Bank Ghana to meet the demand for credit for the growth of small and medium enterprises. The bank will concentrate on economic transformation, particularly industrialization and value addition in agriculture, and act as an enabler for businesses and as a long-term capital provider in the market. Joining us to discuss further from our Abuja studios is Kelvin Emmanuel, CEO of Dairy Hills Limited. Good morning, Kelvin. Thanks for joining us. Starting with Ghana and their development bank, I mean, we already have an African development bank. Is it, I guess, important for independent nations to have their own development banks to further whatever causes that they're after?
Good morning, Rotus. Thank you so much for having me. I think it's important for countries to have their own development banks. However, unlike we've seen in Nigeria, the direct intervention program that the central bank has run in the agricultural sector has not been very effective. The Central Bank of Nigeria says it has disbursed about 1 trillion naira to agriculture, but we've not seen the impact in terms of the primary and secondary layers of the supply chain. You can see that there is a huge disconnect between the primary producers and the secondary processors of agricultural commodities in Nigeria. So I think it's important that what the Development Bank of Ghana is going to do, the $750 million fund that was inaugurated by the president, with counterpart funding, the government of Ghana has pledged $250 million US, the World Bank $200 million. The KFW has pledged $177.5 million US. And you have the African Development Bank that has also pledged $40 million. I was reading through it and I saw that the goal of the bank is to provide funding for SMEs that are unable to typically access single-digit interest loans that are non-collateralized. You know, one of the problems of accessing credits in Africa is the fact that the banking system is mostly collateral-based lending structure. We don't have a credit reporting-based lending structure. So a lot of small companies that don't have a proof of markets, that don't have audited financial statements, that don't have fiscal assets that they can use to collateralize their borrowings from banks are not able to secure funding. The interest rates in the lending rate in Nigeria is somewhere between 22 and 24%. You know, so it's difficult for these companies to be able to access credit. So with the Development Bank of Ghana, what you see typically is debt and equity funding for small companies that are interested in providing value addition for primary inputs. And you know very well that last year Ghana had a fallout with off-takers for cocoa, where the Cocoa Board in Ghana said that they are looking for like an increase in how much the off-takers typically buy cocoa from Ghana, with Ghana as one of the top 3 producers of cocoa in sub-Saharan Africa. So I think this is a step in the right direction for Ghana, because if you look at it very critically, you discover that Ghana needs companies that are in the middle and secondary processing layer of the supply chain to be able to add value to the products, primary products it produces, and for both local consumption and for exports.
Excellent. So you're in the agri space. What specific support do SMEs in agriculture need?
Well, you know, specifically, the SMEs need land space. They need to do land development, right? You know, diesel prices at 800 naira now makes it very difficult. It's going to cost you a minimum of 150,000 naira per day to be able to rent a bulldozer to do land development for diesel alone, right? They need access to inputs, hybrid seeds, they need chemicals, insecticides, herbicides, they need fertilizers. The average fertilizer price, since the last time I was on the show, fertilizer price has jumped by 5,000 naira per bag. You know, the Presidential Fertilizer Initiative has not been very effective to reach out to companies that are in direct production and smallholder farmers as cooperatives and associations to be able to provide these inputs they need. Now, the lenders and funders are complaining that you see, when you give direct intervention funding to companies and to small farmers, they are unable to pay back the loans. And I am telling them that the solution to that problem is to apply what they call invoice factoring. You don't need to give them cash. All you need to do is provide credits for them. So, for example, a company says that we need seeds, we need fertilizer, we need insecticides, we need herbicides. can I get this inputs instead of you give me cash? And then basically, when I harvest, I can sell my produce to an off-taker and then deduct the cost of this input that has been given to me directly from the off-taker back to the lender. This is an innovative way that the Nigerian integrated risk-sharing model for agricultural lending, NISAL, can work with the Development Finance Department of the Central Bank of Nigeria to see that they provide funding to the people who actually need funding to scale the level of production output for commodities. For example, right now as I speak to you, Rotus, Nigeria needs 4.5 million metric tons of maize. Right now as we speak. And this is not available. And that's the reason why you see that the prices of chicken and eggs has gone up, because maize is 54% in the weighted formula composition for the production of animal feeds. And animal feeds is 65% of the use for maize in Nigeria. And Nigeria consists about 15 million metric tons of maize. So these are innovative ideas that the stakeholders in the sector, the Central Bank of Nigeria, the major companies that are in secondary processing layer can apply when they come together to see that they bridge the gap for between the primary and secondary layers of the food supply chain.
Well said. Well said. Always good to hear solutions. Can you quickly, got about a minute to go, let's talk about the African Continental Free Trade Area. Not all the nations have ratified the agreement. I mean, what do you think they're waiting for?
Well, it's very simple. The reason why they are scared, the reason why Eritrea, which is in East Africa, the ECA, Botswana, Guinea-Bissau, Benin Republic, Liberia, and South Sudan are scared is because of issues about anti-subsidy, anti-dumping, and countervailing measures. I'll give you a typical example. I saw a video before we started out of a speech the CBN governor gave where he was making reference to the export proceeds that the Netherlands got last year, about $110 billion. And 18 of that 110 specifically came from milk, chicken, and eggs, and meat. So, for example, the tariff and duty for importing milk into Nigeria is about 10%, right? In my own opinion, because the European Union currently gives huge subsidies to farmers in Netherlands to produce dairy, in my own opinion, I think Nigeria needs to jack up the tariffs that it charges Netherlands and Dutch exporters for bringing milk into Nigeria. And if you're following this, you realize that the dairy sector in Nigeria is worth $1.6 billion, which means that Nigeria imports about $1.6 billion worth of dairy milk into the country on a yearly basis. So if, for example, Nigeria is unable to compete because of subsidy that is provided by the European Union to farmers in Netherlands, you can see why these small countries that are not major export producers are afraid about sending in their export exclusion schedules to the AFCT Secretariat to ratify the deal. And you know that currently 45 out of 55 countries are ratified, and they are hoping on the remaining 6 countries to be able to join the agreement for the implementation to kick off. So I don't blame them at all. So these are important discussions that needs to be had. And especially when you consider the fact that the sensitive list is 7%, the exclusive list is 30%, I expect that Nigeria should negotiate that cement is excluded from that list. Milk is excluded from that list, that petrol is refined petroleum products when the refineries come on stream is excluded from that list, and gas is also excluded from that list, because this constitutes very sensitive and exclusive items that the Nigeria needs to consider joining in this 10% allowance it has for the list of tariff schedules.
Kelvin, we've actually bought a little bit of more time. What you said on increasing tariffs on dairy products coming in from the Netherlands, great example, but I want to read something to you. We had the World Bank yesterday on the Arise Exchange, which everybody can watch, 7 p.m. West African time. They just released their reports on doing Nigerian development updates, doing business unusual. Let me read a quote to you since you mentioned tariffs. Nigeria's protectionist trade policy increased import restrictions through higher tariffs and levies, import bans, foreign exchange limitations, and border closures. While these measures have been aimed at supporting the country's industrialization and security aims, they have been detrimental in other ways. What do you make of that quote? If you are calling for higher tariffs on, I guess, subsidized agricultural products coming from an example, the Netherlands. I know you're giving an example, but what do you make of that?
I think the World Bank is pandering to his own interest. The World Bank, of course, represents the interests of the G7, the US government, and the European Union. So I don't expect them to say anything different. I understand that there has been drawbacks and challenges to the backward integration program the Nigerian government has implemented. I don't support all the measures it enforced in achieving like full backward integration for rice, for example, which took 2.9 trillion naira in worth of dollars in foreign exchange imports when Nigeria was still importing rice. I don't expect them to say otherwise. But I think we need to be fair and go down to the details. Now, for example, the HS code, Harmonized System Code for milk is 0402. I think when you look at the fact that the European Union provides huge subsidies to its farmers, the US government provides subsidies to its farmers, and that on a level playing field, the countries where they export these commodities to are unable to compete with them on price because of the subsidies that are provided by the government. They can say that. Nigeria needs to apply some bit of protectionism in its implementation of the tariff exclusion schedules that it sends to the African Free Trade Continental Agreement framework. It needs to be very wise in doing that. And it needs to include sensitive areas where Nigeria has especially comparative advantage. And I saw the video of the central bank governor talking about the fact that we have arable land and the fact that the Netherlands, the land area of the Netherlands, which is 33,000 square kilometers, is less than the land mass of Niger State alone, which is in the middle belt. I think it's important for us to wake up to reality. Wake up to reality and consider the fact that based on our comparative advantage, which is in petroleum products when we start refining, which is in natural gas, which is in being able to do backward integration for rice, which is in being able to do backward integration for dairy products. These 4 areas needs to be included. And also cement, which is also already an established industry. These 5 areas needs to be included in both the sensitive and exclusive schedules for the countries that are joining the AfCFTA framework.
Kelvin Emmanuel, it's always great to have you on. Fascinating conversation. I wish we had more time. CEO of Dairy Hill Limited, thank you so much for joining us. We'll have you back again to continue this debate. Very fascinating stuff.